Hello, everyone. Welcome back to the RationalInvestor.com's weekend frivolity. This is our broiler chicken show. Bark, 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 bark. I suppose that's another project that we're working on. Eventually, we'll get down the pike is little soundbite intros for these shows. So many things to do, eh? Never ends. We'll say, actually, I'm very pleased to see that the dashboard information and our extensive investment over the past 4 or 5 years building this platform out, I think is paying dividends now. Sure helps to see things clearly. In fact, I had pointed out the middle of last week, well, maybe even 2 weeks ago. And Chris, maybe you could write this down. I think I mentioned this before. But we had the bond market about 2 or 3 weeks, maybe 2 weeks ago. Very overbought, 100% on both readings. And of course, that's what we said. If you ever see that, wah, 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 warning, warning, not a good sign whatsoever. And if we actually pull up our little bond, actually, this is even better. Nice little shill sales speech to get you to sign up for the breadth dashboard. You can actually go in and I did this over the weekend. Go in and look at the individual sectors and actually like pull apart that bond market and go, okay, like what the heck's going on there? Where's that list? I think it might have been up at the top. The bonds, there they are. And there's that image there. Right. This is basically like this market's ridiculously overbought. You're in big trouble. Now, sometimes the big trouble can be the whole damn market just melts down on the other side of it. Other times it can be, well, everything just sort of calms down, goes sideways, and we clean up the technical picture. We put in a base, and away we go. Point of the matter here is that I think this was an excellent analogy. And Chris, do you remember? And I even mentioned it to Josh too. Do you remember a week or two ago? Maybe we can just go back and I'll look through old Daily Brief videos, but it just was fairly recent. And that's what the image looked like when it's both 100% bull. And then, what's super cool about the site is we can just go and look at the charts. And obviously, that's not the case now. Short term, we're now at 33, so we've come off dramatically from that 100%. So, what does it look like? And, if you just zoom in on these charts, you notice uptrend line, right? Our definition of taking a trade. So we want to see market structure on the other side of trend lines. So you can see there isn't a trade here, but that pullback in price over the past week or two is that image of everybody coming back down to earth. And that short-term image cleaning itself up. Same sort of thing here. If you actually got a market structure sell signal on the other side of that trend line, big sell signals. But you can definitely see this price action, market gapping lower, heading down is your tell. And you can see the whole bond market. So you can see I actually zoomed in on one of the bond proxies in here. And you can see if we drew a trend line off of this guy, boom, 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 that breakdown that was relatively polite in things like US aggregate bonds and total bond market. Well, in the iShares floating rate bond market, that actually did translate lots of market structure failure. And look out, that's a dangerous market looking there. And I think what this is this is more a function of the shorter end of the curve. I think this more longer end of the curve, it's relatively happy, but the short end of the curve looks extremely dangerous. So this is interesting, 3 to 7 years. As we said, uptrend lines being broken, any kind of counter trend rally, and then failure. And look out below. Look at this one, the short-term corporate bond market. ETF. Trend line being tested right now. So we're going to find out whether this, because this was the whole reason why the market started to melt down there 6-8 months ago, was the deteriorating bond market. And I think everybody's kind of forgotten about this. Now, this is interesting. Look at the inflation protected bonds. There's your uptrend line, just been puked on, totally broken it. In fact, it almost looks like they took this thing to new lows. Any kind of signs of failure here, and that is an outright short. So I guess just interesting. First thing that jumped out at me was we said that the bond market was leading the whole damn market up off of the lows. Bond market got happier, got so happy, and hopefully maybe Sjord can give us like an ability to scroll back over time so you can see, because that would be a really, really important image for you to have seen and registered, and we can make reference to. So bond market went uber overbought and now is starting to break down to the point where actually there's some bond charts that are actually looking like they're uber bearish again. Get ready, more higher interest rates. Goodness. So where am I going with all this? I don't necessarily want to turn you all into bond traders. Boring. But what I did find interesting, are there any markets currently that are flashing that reading that we got last week or two ago about the overboughtedness in the bond market? Are there any other markets that are doing that? And the answer is yes. Look at this goddamn country funds, right? These are all the stock indexes around the world, flashing 90 on the short term, 90 on the medium term. And then, interestingly enough, the index ETFs. Now, there isn't too many components in here, and I've kind of asked you to move this off. Eventually, he'll hear me. But nonetheless, as it's still there, there's like 3 components in there, but they're all uber bullish, both on the short and medium term. Is that a warning sign? You better believe it. So I don't know whether people are really going to appreciate the system here is saying, you equity investors, you better be careful. Market's overbought. And so the system is already paying dividends. It's doing exactly what I had hoped. And then, you pull up the actual country funds themselves, and this is this is why this system is so awesome. Like I always tell you guys, I'm from Missouri, so show me, right? I don't want to hear the story. I certainly don't want to hear some clown barking on TV. I want to see the price charts. M's are bullish, W's are bearish, right? All that kind of stuff. Okay, so how the hell do I get back over there? This is the tags. Hey, still learning how to navigate this place. Anyway, country funds. There we go. We can get it from over here. So remember I said just a moment ago that comment about the bond market? I mean, this is so freaking cool because it's doing exactly what it's supposed to do. Yay! And I'll go back and show that to you again. So I remember we said the bond market about a week or so ago was ridiculously overbought. We had short and medium term embedded, heavily overbought. That was a major warning sign that the bonds looked like they were getting ready to break. And then to actually see those bonds, it's interesting how that's not even in that list there. But to see those bonds, you got to grab them over here, grab the bond list. And we showed you there was the indicator way overbought, and you can see it breaking down over time. And in the short term, you can see that, like I said, as somebody who's actually trading bonds, that's some serious price movement. They're making some bacon there. I showed you a few of the charts there, especially like that spread chart. So we look at the country funds. Do you see how overbought this is? I mean, basically, the engine's working. It's doing its job. And ironically enough, half of the reason why, where should we do this? Half of the reason why the stock market actually lifted there recently was because the bond market got happier. So now the bond market is rolling over. It's actually been going down for a week or two. Now it looks like the stock market's going to go, oh, Jesus. It looks like, the interest rates are not coming right back down right away, and maybe we got to roll back over and head lower. So, I mean, that image right there has got to give you a bit of pause. That's a little bit dangerous. I think we call that sort of a weak signal, but nonetheless, it is a sell signal. And it's not, and considering the fact that the backdrop of the market is that the equity market is overbought, that's not a good sign. There is, for those people that invest in sort of the stock market equivalent of bonds, the utility market, with the way the Feds have been ratcheting around short-term interest rates, of course, that really affects the utilities because they're basically their rates are fixed, by things like utility boards and stuff like that. But they're very, very capital intensive. So really, a huge part of their business model is what's the difference between what the rates they're charging the public, all you Bitcoiners, this conversation, and what the Fed's going to charge them to keep rolling over short-term debt. Anyway, point of the matter here is interest rates looking back on the sort of sign. And you can see slowly but surely we're starting to get a little bit of sort of chiseling into the bull market that was trying to, establish itself over the past week or so in the equity markets. You can see the European stock market looks to me actually like it's leading a little bit to the downside. And interesting too to see these commodity indexes. Canada's still holding in there, but it's interesting to see Australia starting to slip a little bit there. And of course, lots and lots of wrangling about energy prices right now and coal. And of course, the World Economic Forum's they're all, going nuts about how they just want to kill the fossil fuel industry. And of course, Australia is a very heavy coal proxy. So if they're going to war on coal, Australia is probably going to be in a bit of trouble. Anyway, so and then of course the final piece to all this, and frankly speaking, I think it's a fantastic leading indicator of risk, is the crypto market. And unfortunately, guys, I don't know whether you can. Well, I'm sure you can see. Things are looking a little heavy here again. We're back to not necessarily egregiously overbought. I don't think we're in the kind of scenario where it's sort of like, oh my God, you could expect to see an 80-90% haircut. If you come in and chase and you buy Allen's coin up at 70 cents, I think now it is basically a 70-80% haircut. Merry Christmas. I suppose if you went and bought even Bitcoin itself at the top, they're 60,000. Now it's sitting about less than half that. So I don't know whether we're walking into a frothy toppy market or more just of like we're just not quite at the bottom just yet. And unfortunately, I think there was one study that I've been showing people a lot recently. I have to say, I really like the development of the TRI website and the platform now, because I can have these conversations relatively easily with you guys because we have all this information up here. So thank you very much, guys, for building out the website and making it a really powerful resource. I constantly am making reference to this chart of late. Why? Well, because this is we, if like it or lump it, U.S. dollar still world's hegemony. Like it or lump it, U.S. Taxpayer really is the only sort of monetary base of the world right now that anybody can trust. And so as a result, the political situation within the United States of America is obviously extremely dominant. And it's fascinating to hear there's like the United States of America and the hegemony and sort of like JP Morgans and Jekyll Islands and drinking baby's blood and the whole damn thing, right? There's all that shit, and then you've got these kind of this satellite. I'm not even quite sure what the hell to make out of them, but these are these World Economic Forum people that are all there. You can really hear it in their voices. They're all European sort of commie socialist central planners that think that they know the best course for human history, and everybody else is just, unenlightened stupidity. If that is a word. I don't know. I honestly don't know how do you make the head or tail of the two, and I wonder, who's actually driving the bus here. Yeah, exactly, Graham. Like you'll own nothing and like it. But frankly speaking, I can tell you right now, Joey Diamond, he does not subscribe to that newsletter. So what the hell's really going on here? I definitely think, that here's the thing, right? The whole facade of this current U.S. dollar hegemony system is the idea that the U.S. tax payer still is guaranteeing U.S. government debt. And frankly speaking, I don't think anybody else's debt is worth shit out there in the world right now. And the easy way for you to understand what the market values somebody's debt at right now is look at the inflation rate, because the inflation literally means what does the market think of your paper, or the value of whatever your paper is. And, it was so sad. The commodity countries themselves have done very well here over the past 20 years, but they did not take the opportunity to pay down their debts. In fact, stupid Canada, we actually had socialist governments through the entire commodity cycle basically run deficits when they should have been paying down the national debt. But the problem is that the 1% oligarch banker class can't make a profit off of government paying down debt, right? How do you they make a percentage fee off of new issuance? Well, you're saying, Brian, they're getting rid of issuance, they're paying down debt, they're taking debt off of the books. How are the banker 1% leeches supposed to finance their ridiculous chateaus and their Davos conventions and all that nonsense, $1 million fucking gold-plated steak dinners and all that garbage? How can they finance that if these governments are taking out less debt and paying down debt and making the currency more valuable? The answer is they can't. So the only way that system goes on is governments have to be encouraged to issue more debt. And then, of course, the bankers can get more fees. So that's the world that we live in. I don't think that that's going to change anytime soon. But what I will say is, on top of that sort of banker model that we have to be worried about, and it basically dominates human society, I believe that there always has to be sort of a driving story. Why are you doing this? How can you justify these new taxes? How do you justify this? And of course, everybody in this whole, climate change conversation, that is their justification. Frankly speaking, I don't think the actual climate itself is even a consideration. What I did hear out of sort of recent stuff that I've heard out of them is that they definitely believe that there are industries that are going to be decimated through this sort of change in human behavior, forced or otherwise. And there are going to be industries that are growth industries. And what I heard from, there's one video that I was sharing on the site recently, funny little Brit guy who's all conspiracy and all that, listening to these World Economic Forums. The one thing that I definitely heard from them is the banking class, they want to use this opportunity to get rich off of the industries that they are going to encourage to grow. And they are also going to try and mitigate the losses, and maybe even capitalize, shorting, that kind of stuff. Capitalize on the industries that they think that are going to get wiped out. That's what this all comes down to. Of course, at the end of the day, it's all about money, right? So, anyway, point of the matter here is there is this huge sort of backdrop story, and I think it's been sort of churning now for about 20, 30 years. Al Gore started it with the whole Florida is going to sink underneath the ocean. I don't think Florida's gone anywhere. So I'm still sitting here sort of
Audio jump.
scratching my head going, well, according to these people 20, 30 years ago, Florida was supposed to be gone by 2025. Here we are. So not a hell of a lot's changed. Um, and what I find fascinating is at the beginning of this conversation, it started out as um, global warming. And then we got into, holy Jesus, these winters are cold. I thought you said there was global warming. Oh, okay. Well, so we got to change the narrative. It's climate change now. And of course, that bothers me immensely because if anybody actually takes the time to study this planet, you actually realize that the climate has actually changed quite dramatically for this funny little marble that's floating around in space over its history. At one point, the planet Earth, if you actually drove up from space and looked at it, it was pink. And it was quite human uninhabitable, no doubt about it. So, does the Earth's climate change? You better believe it. Is it even realistic for us to even think that we are even remotely capable of even affecting the course of that change? I don't think so. But I will say one thing that really bothers me immensely is that through this whole conversation change, nobody is concentrating on what we used to concentrate on, which was so important to our society, and that was pollution. I mean, just can you drink the water? Can you breathe the air? Oh no, we got to have this. It's got to all be about carbon, and of course the amount of carbon in the air. Blah 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 blah. I mean, God, there are some rivers in the eastern United States that literally the river runs like blood red from all the pollution from all the pig farms upriver in the Carolinas, and literally you cannot go into the water. It's so toxic. So, I mean, what's a relative problem here? Uh, I do believe, and of course, this also has a lot to do with it. A lot of, these billionaires and probably trillionaires have pretty big bets placed one way or the other. And so they're going to use their influence, whether it's monetary or whether it's social media or whatever, to push one narrative versus another, which is, of course, in itself, which brings us full circle to this image. Because I think what's going to happen here into November is this is literally a proxy on whether the oligarch one percenters can continue on their fugazi money printing, restructuring society in the image that they want, or, and keep in mind, the United States of America citizen is really the only sort of credit worthy backing entity in the world. And all of our Fugazi money system is based on the acceptance of the United States citizen to carry more debt. Does the United States citizen say enough is enough? And we have an actual a violent reversal in a lot of the policies that have been put in place following the sort of populist reaction to the last president of the United States, which sort of sent a very polarizing electorate to Washington. I don't really think that that's actually a real representation of the American populace, but it's almost the same as George Bush Jr. when he was done his second term. I mean, literally, the Republicans were run out of Washington on a rail. The populace was just so, we do not want the right wing in there anymore. So do anybody else, anything but them. So do we have sort of a checking of the system? And I think what's going to happen here, folks, is I think the people that it's going to be a battle between the communists, like my country's leader, I think he would actually like to see gasoline prices and the prices that you pay for at the pump and stuff absolutely go through the roof. I think actually that's their plan. Um, and in a weird sort of way, I think what ends up happening is this becomes a self-fulfilling prophecy. By prices going absolutely through the roof, you're going to get an absolute violent knee-jerk reaction from the populace going the other direction. And bottom line here is that you can see uh, there's November way over there. And I'll tell you, Mr. Biden's got a hell of a slog ahead of him. I'll tell you that much. What I'm a little bit worried about here, of course, remember we had said sort of the bond market spat up a little bit of a buy signal there. Well, I wouldn't really say buy signal, maybe a little bit of a reversal there about a month or so ago, which sort of put a floor into the stock market. But the bond market rally has exhausted itself. And unfortunately, as I'm sure you guys probably all are well aware of, energy prices are showing absolutely no signs of slowing down here. So if we go look at our futures contract, that looks still very, very uppy. In fact, I remember distinctly about a month or so ago, maybe even a couple months ago, in our day trading room, one of the traders pointed out, these triangles usually they resolve bullishly, and that's going to be pretty problematic. And I got to say, I think he was spot on there with his analysis. I even put a tweet up to the effect like, TRIers are still pretty bullish of oil here. And the problem here, of course, is especially for this particular community. Well, maybe not particular now, but at least a little while ago, 1 year ago, it was like everybody was in crypto. I don't think everybody's in crypto now anymore. But as long as this thing keeps pushing higher, of course, that's going to put pressure on things like, actually not the Nikkei. I was looking for the NASDAQ. There's the NASDAQ. It's going to put pressure on the NASDAQ. And you can see the NASDAQ is still pointing technically down. I don't know whether we've actually hit this bearish ABCD objective yet or not. Boom, 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 boom. And that would be a conservative one, right? Sometimes they go 127s, 1.618. So I actually don't mind the idea of this NASDAQ heading down into this reload zone down here. And of course, unfortunately, right, that also is a comment on your beloved Bitcoin, all you crazy Bitcoiners. And I suppose, if we just do a really simple view, boom, 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 right, down into everybody's going, oh my God, burn that guy at the stake. But probably somewhere down into here. And the interesting thing about this, one thing I do like about this is let's just rip the Band-Aid off. We all know, and I mean, God, if you've been watching any of my damn videos forever, if somebody ever comes to me in the public and says, well, what the hell's the value of one of these Bitcoins? I would say the value of one of these Bitcoins is what does it take to actually go and actually become part of the business? Because really, that's all Bitcoin is. It's just it's a whole bunch of U's. All you did is you went out there, you awesome you, and you bought your graphics card, or maybe if you're really lucky, an ASICS card or something along those lines. And you took your computer and you plugged it into the interneting, and you went and paid your electricity bill like a good citizen, and you turned on your rig, and boom, away you go. You are now part of the Bitcoin network. I mean, I know a lot of people will actually join mining pools and stuff like that to try and increase their rates of return stuff. But at the end of the day, that's really what it was all about. And it's weird. Don't you guys remember there used to be that Greek guy? What was that Greek guy's name? And man, he used to be talking about Bitcoin every fucking day. Couldn't believe it. Just going on and on and on and on and on and on, just constantly. I mean, it was just like he was like a broken record for years and years and years. And yet I don't hear anything about any of those people anymore. Never hear anything from Roger Ver anymore. Remember, he was quite the rage in this space for a long time. Anyway, point of the matter here is if somebody in the public asked me, what is a Bitcoin worth? I'd say, well, it's probably worth whatever sort of the industry standard is of mining equipment. Obviously, in this, fucked up 2022, 2023 world, there's a lot of uncertainty about all of this stuff. But if you're a longtime business owner, operator, especially if you could like relocate in Texas or something like that, I'm sure they'd be more than happy to lock in some pretty juicy electrical rates for you. I remember we had one person, yeah, there you are, NGS Antonopoulos and all that. Yeah, well, whatever happened to that guy? Anyway, he used to constantly go on and 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 on. And now you don't hear anything from any of those guys. Doesn't that seem a bit odd? Seems odd to me. Anyway, so, Brian is S17s, S19s down here, 10, 15 Gs. Seems logical to me. So that's always been the message for me. And then, of course, technical objectives, A, B, C, Ds, value high, Wyckoff checks, not a big surprise. And, the irony of it all is that, the Bitcoiners themselves, if we do have crude oil go absolutely crazy, and you can almost hear the talking heads are going to be able to explain all of this away because they're so damn smart. And of course, they know everything. So my hunch is you're probably going to turn on the TV one day and you're going to hear people say, well, Bitcoin is highly correlated with the NASDAQ. And the NASDAQ, of course, is inversely correlated to energy costs. And if energy costs are going up, then business managers themselves have a choice. Do I either pay the electricity and the fuel for the trucks and the electricity for the light bulbs and the machinery, or do I invest in productivity technology? And if you have skyrocketing oil prices, obviously they're going to have less money in their budgets to buy productivity technology, i.e. less money to buy Microsoft software, less money to buy Oracle software, that kind of stuff. And so as a result, tech stocks and all that kind of stuff fall. And people are going to be like, oh, see, and Bitcoin's highly correlated with technology. So, there's your backdrop. I mean, the irony of it all, this is the thing that bugs me the most out of all of this. And it just seems like I'm talking to myself. So I don't even know whether it's worth mentioning, but I'll say it just for the record because it's what I do. And maybe one day I'll write a book about this, and over the centuries, maybe people will clue into this. But I don't actually think commodity prices are actually going up at all. I think that the powers that be have pulled off the most beautiful con job on the public. And the con job started, of course, we all know, in 2008 with this quote unquote quantitative easing, which is really nothing more than turn your fucking printing presses on and away you go. I get the impression that as long as China wanted to try and build out its economy, it was willing to sacrifice its population for standard of living to get hold of those U.S. contracts and the international contracts. Turns out actually Germany now is really the biggest sort of supply chain user, if you will, of China. And as long as that Chinese economy was on the grow, and the population was willing to work as slaves for substandard wages, then that story would just continue. And of course, that's deflationary, right? You got slaves producing shit for nothing. As soon as the slaves start saying, hey, you know what? We want a little better standard of living. All of a sudden, mysteriously now, oh, look at all these supply chain issue management problems we have. No, you don't have supply chain issue management problems. What you have is all of the slaves that were willing to work for nothing to keep your price points really low. So all you Americans can go to Walmart and buy your cheap ass shit made in China. All right, that those days are over. Chinese are screw it, man. We want fair wages. We want to get paid the going rate. And so as a result, all of a sudden, mysteriously, the prices of everything are all shooting up. And it was kind of funny because actually, about once a month or so, I do a big grocery shop. And I went out yesterday, and I like to go to two or three different places. Brian's, he's a cheap ass. Went to Walmart. Nothing there was competitively priced. And in fact, it's gotten so bad in Vancouver that actually Walmart is actually even higher priced than the grocery stores. So there is no great sales pitch, no great sales appeal to shop at Walmart anymore. And the irony of that is, you look at Walmart stock. The proof of the pudding's in the eating, as they say. So if you were a Walmart stock shareholder, how would you be feeling right now? Well, I guess I can just do it here. I mean, trust me, I think it's starting to show that Walmart had a fantastic business model for a very long period of time, but I think that business model is now starting to come to an end. Not actually, and that's interesting. So, whoops, I don't know what the hell I did there. That's not an actual key reversal for me, but it is definitely an engulfing bar, and it is a candle body key reversal. But if anything, and that, this is a monthly price chart. We look at the daily price chart just to see the carnage. Can you see Walmart's business model is coming to an end? Do you understand now what this inflation, quote unquote, really is? This is, yeah, gap theory for the win, eh? This is a graphic illustration that as long as Walmart was able to outsource their products in Asia nice and cheaply, huge profit margins, stock just keeps going up and up and up and up and up. I mean, it just went on forever. And I might argue that Fakezi is now, and here's the kick in the pants. I mean, really, all that's going to happen is that we're just gonna level. But we had like literally 20 years of the Chinese basically saying, we're going to force our citizens to work at slave labor wages. I think also too in the process they went and blew up their debt market. So I don't know whether they can even get any more debt into the system. And it's kind of funny actually. Under Trump, he was threatening to actually force the Chinese to honor the debts from before the Second World War. Oh yeah, they never did pay back any of that debt. Anyway, so it sounds to me like all that's coming to an end. And of course, this, I mean, God, the incredible ways that mafia over there is really fucking their people over. Literally locking down like millions of people all at once, because there's no way in hell Winnie the Pooh is going to admit that his vaccine, his country's vaccine, is actually garbage. It was useless. And then on top of that, oh, by the way, the country itself is completely gutted. It's completely broke. Evergrande is your sort of analogy of how bad the debt situation is there. What's fascinating about all this is Winnie actually has a re-election coming up here this fall. So it would be really cool to see actually Winnie get knocked back down to earth, maybe lose his dictator for life kind of status over there. Maybe that might be some of the checks that we're starting to see to right this cycle. That'd be really interesting. That's probably the one, on top of the way this U.S. election goes. And as I said there earlier, I believe that they're going to move the economy around. They're going, what a coincidence. We have a big debate over Roe versus Wade now. Well, where the hell did that just pop out of all of a sudden? Well, somebody leaked some internal conversations that they were having in the Supreme Court back chambers. Oh, that's a nice, interesting sort of polarizing thing to inject in an election year. where the left wing is already in a bit of trouble. Yeah, let's see if we can splinter the right wing a little bit. But what's fascinating about this is I think they're going to try and throw in these hearings, and also gun violence. That's going to be another thing that's going to try and break the right wing apart. I don't think, and sadly, of course, like you try and even just make sense of what the hell that guy did down there in Texas. I mean, there's no logic to any of this. But it's along the same lines as I couldn't believe it, in that crisis, and there were like riots and stuff in Washington. Um, I think it was around the election. I can't remember if it was in the election. But one day, somebody had filmed this guy was walking up and down the highway in Washington State, just lighting the goddamn freeway on fire, and all the brush and stuff around there, and nobody said anything about it. It was like, what the hell is this guy doing? So, I mean, I don't know. It doesn't make any sense. But anyway, what I will say, I can't comment on any of that. But what I will say is it's interesting how we're getting a whole bunch of sort of politically polarizing things all developing now, right around this, heading into this election, that will probably, whether it's conspiracy or not, who knows? I'll leave that for you to answer. But there's probably going to polarize the right wing as much as they possibly can. The question ultimately here, and the message that I'm hearing right now, is that Mr. Biden is under immense amount of pressure because everybody and their brother is talking about inflation right now. Everybody. And, my silly little idiot dictator here in this country, I don't think he can avoid it now. Like, I think for a while he was kind of just poo-pooing it, going, man, if you owned a house, you did perfectly fine. Now I think the homeowners, they're going to start to feel it. And the worst part about the rising housing market is that, of course, all the governments get to reassess your tax bill. So if you're on a fixed income and you owned a house in Vancouver, and you'd spent your whole life trying to, just saving your money, paying off the mortgage, then, you go into retirement, CCP, OAS, all that fixed numbers. And all of a sudden, house prices double. And that means that your property tax bill probably just doubled. How much of your pension do you have left to actually spend on food? I spent my whole life. I paid off the mortgage. I'm supposed to be debt free. I just want to live in my home and just, do my thing. And boom, your quote unquote rent in the form of property taxes now are going hyperinflationary. On top of the fact that your utilities and food and everything else. And actually, I was at the grocery store yesterday. I couldn't believe it. Like, literally, it's now 200 Canadian dollars to stock up my fridge for a month. $200 now. Ridiculous. So I believe that the politicians have run out of their wiggle room. Now, it's going to be really interesting to watch how the politicians, and the 1% and all these Davos people and, this Mark Carney guy who scares the hell out of me. The guy's typical Canadian technocrat. You don't know who he is, but I think he is sort of going to be one of your big brother sort of figures for the rest of our lives. And the funny thing is, nobody talks about him. Fascinating. Anyway, point here is right now the inflation bugaboo is awful. And I think, like I showed you a moment ago, those energy prices look like they want to go higher. Russia situation, from what I was reading, they're ramping up. They're not backing off here. And Mr. Putin has sent another warning about the West arming and helping Ukraine. So I got a feeling that he's going to say, look, I warned you 3 or 4 times. Now it's time for me to up the ante once again. I don't know what the hell that looks like, but if I look at this chart and I look at everything what I'm seeing here, I started the conversation off with, the whole reason why we went down to begin with was the bond market. Bond market got a little oversold there a month or so ago and started to bounce back. Then we started to get overbought ceilings from the readings from the bonds. The bonds are now starting to break down, so that's happening on Q. Stocks are now starting to react, and they're starting to look like they're getting ready to break down. And you notice that, and unfortunately, which year is it of all these four different years? Well, we're actually in this dotted teal line one, which is the worst out of all of these. And you notice that it didn't really matter what year we're in. We're supposed to look for some sort of bottom the end of June, beginning of July. Wow, that sure was a hole. Man, he went on there for about 20 minutes without even coming up for air to try and sort of explain all that. And what I hear, and what's scary about this now, is what I'm hearing from the politicians is it's not our fault, blame the Fed. That only goes so far. And I can tell you, like, I was a little surprised to hear just recently, Janet Yellen came out and publicly said, yep, it's my fault, I got it wrong. So I get the funny feeling that Janet Yellen is actually going to fall on the grenade and she's going to take the hit. And it was interesting. Somebody, I was watching this one financial broadcast recently, and the guy was like, if that was a career politician, there's no way in hell she would do that. But because Janet Yellen is a career academic, and I don't think she really cares about her political career. I think she basically said, look, I'll take the fall for this. So my hunch is that things are going to get uglier here in the short term. I actually think that we're going to hit like, I got to tell you, man, this energy price, it looks like it's about to go parabolic here. So, like I said, the fact that fucking Vladdy over there is going, I'm warning you, something's about to hit the fan here, folks. Price chart seems to indicate that as well. I would be surprised if this thing didn't like shoot higher here. I think momentum is still pointing up here. So anyway, we'll see what the hell happens. And I think ultimately this is going to be the reason why you see the stocks, and unfortunately crypto. I just don't see a hell of a lot here in the short term for crypto. And probably US dollar continues its way higher here. But that's sort of what I'm thinking here into the end of this month. Now, I suppose the good part about that, because keep in mind, where are we in this? I think we're sort of in this mess right here. So you can see it's back and forth, back and forth. I've heard a lot of sort of talking heads in the marketplace talking about how this was a bear market relief rally. The market rallied back too hard, too strong, too fast, all that kind of stuff. So it aligns along with this. And of course, the breadth indicator, I think, is kind of backing up that thinking. Also, another thing too, and we haven't officially rolled it out, but we're awfully close to. But this is another great way you can use this platform that we built. I used to do a survey of the commodity markets from a weekly perspective, so that we're always thinking about, am I on the right side of the trend? Because ideally, you want to be trading with the trend, not against the trend. So what does that mean? Very simply put, what I want to see is 13 EMAs above 30 SMAs. And I want to see the market itself below the 52-week 50% rule. So it's interesting how palladium here, of all things, actually is giving us a pretty high reading. Which, of course, I think... Actually, it was interesting. I think I saw like the gold and silver market starting to turn back up there last week. But just for argument's sake, let's just go see what the hell this palladium looks like. Which one it is? PALL. All right, so uppy market made new highs, big old gaps up top. No real sell signals per se yet, but I suppose if we got a nice little W here, I wouldn't really fault people for hunting longs. And Probably, yeah, this is a weekly price chart. So we look at our moving averages. Yeah, kind of sketchy at best. Looks like short term we're breaking down. If we had had a nice little W turn there, we probably would have gotten a nice little bullish turn in the momentum indicator. And in this case, we're using the just simple moving average relationship to tell us about momentum. So that's not really coming in. That's why it's sort of reading a 5 and not a 6. If this actually was back above there and we started to W out, probably get a 6. But this is the kind of market, right? Actually, this is a good example, right? So if I want to be hunting something to buy, what I really want to find is markets that are trading near the bottom end of their ranges, reload zones. Heard Brian say that before. And, in this case, it's not here, but right, nice little W breakout in price. And, like if we had actually seen this push up through here, then that my hunch probably would have pushed these moving average. It would have turned that 13 back up, but it's just not there. Point here is, and we, like I said, still have to build it out. So it's not finished yet, but 5s are hunting buys. Got a lot of markets that were hunting buys, including a lot of crypto markets that really want to turn, but they're just not, the moving average relationships are just not there yet. I think it's interesting how Seord actually has that as slightly up. Maybe that's a reading as of last week. So this hasn't updated yet because of Sunday. So, ideally what I want to see, and this is a weekly commodity trend survey, right? I want to see 6s that are basically going to spit up buy signals here. And you can see none. There's a 5. There's another 5, 5s, 5s, couple 5s, 5s, a whole bunch of 5s in here in the transports. Nothing here in the utilities. Remember, we said the bond market just looks like poop. These are kind of meh readings. And in the crypto space, look, we did have a lot of names that are basically at the bottom end of ranges. We're just waiting for these moving averages to turn back bullishly. And you can see not. You can just go through them all. They're all bearishly pointing. So they're cheap. They're just not trending higher yet. And keep in mind, you don't see 6s very often here. It's a very small window when 6s develop. Any of the site members have been telling you that, basically a site member, we won't get into that today. Anyway, John, he put together his web page, and it has all the descriptions and stuff. We just have to port over the descriptions and the pictures and stuff here. And actually, what I really want to do is I want to put this summary little piece. I want to put this in the overview page. So, man, this is going to look so cool when it's all tricked out. Anyway, as you saw there, no buys right now. It's a poopy market. And we don't really have any sell signals either. In fact, we're not even really hunting sells because the whole market's been knocked down. So everything's like super cheap. I wouldn't even really think about selling and shorting. And that sort of goes back to what we're talking about here. Do we really want to be shorting like here? Knowing that there's the bottom and, within a month, right, on the other side of June, the middle of July, we're probably going to be right back at the prices that we're at now. And then, if you did short here, you might actually get caught and the darn market zips all the way up here and now you're underwater. Notice that that's probably where we're going to get our sexy sell signals and shorting and all that. And you can see that's the middle to the end of August. So fascinating. We're too late to be sellers, right? Our sell signals all came over here, all these M's, and you watch the way the stock market melted down there. It's pretty impressive, really. I don't think we're at a bottom just yet, but this is not the time to be thinking about shorting. And it's interesting, of course, that the talking heads on the media, and I talk to you guys about this, especially site members often talk about this. But first and foremost, at any given point in time, we should always be thinking about what's a 38.2 retracement, because that's technically what markets like to do. It's not a sign of a crash. It's just a sign of, well, we're just going to clean up the excesses of whatever the previous bull run was. Well, there's 38.2. So really, market didn't do anything out of the ordinary here. It's actually just business as usual. And then more importantly, how do we trigger the public into freaking out and selling into our buy orders, which is the worst part about all this? Well, you take the high of the price, you knock off 20%, and for some reason, and I've even had a lot like James Stack, if you ever know him, I think he was, oh God, I can't remember I think it's called Invest Tech was his fund. And he used to always go on NBR and he'd be like, I hate that 20% reference. It is such bullshit. And of course, they'd be like, well, can't say that on public television, sir. Well, I subscribe to the Beamish school of vocabulary. I can say whatever the hell I want. Anyway, what a surprise. They brought it down 20%. And even when they did this on that day, you turned on the TV and every goddamn media outlet, 20% facial correction, 20%, we're officially heading off a cliff, 20%, oh, you better freak out. And actually, it turns out that that was a trap. And the worst part about that is what letter of the alphabet is that? That's a V. It's not a W. I mean, sadly, this is a V, which scares the hell out of me because at some point that low's got to be tested. It's interesting as you notice that this was a V, and for the longest time, I remember sitting there with people going, I hate to say it, folks, but at some point, that damn low is going to have to be tested. That's what it looked like. So that's floating out there, folks. I mean, don't kid yourselves. You can even see there's even some price gaps down in here. Look at these holes, right? So could you get a move down into that level to freak everybody out? Oh, lo and behold, I don't know whether you saw, and let's see whether you guys saw. Did the congressional election indicator suggest that we could break these lows down the road? Would it be in the current? Well, okay, two questions. Would it be in the bankster, Joey Diamond, Goldman Sachs, would it be in their best interest to keep a government body that's in power, that is friendly to them and wants to spend tons and tons of money and mortgage the kids' future today? And keep in mind, Biden's almost dead, so he doesn't give a fuck about the grandkids. He's like, I want my pet projects now so I can go to my deathbed knowing I got my pet project. I don't give a fuck about, 50 years down the road. I'm just about dead, man. I want that money now. Okay, does that scenario, does that play into the banksters? Sort of, hey, we own the economy, deficit spend. Just keep borrowing money, keep inflating the game. Brrr, more fees, because remember, every bank makes a percentage fee on every loan handed out. Do they like that? Does that work well for them? How about the party that could potentially unseat the people that are in power right now? Do they want to help the oil industry? Do they want to hurt the oil industry? I'm not, it's fascinating to bring sort of the right wing into this right now. I mean, I get the impression that basically the power structure that's in place right now wants to kill the oil industry and all the oil barons and all of that. But the problem is that the technology and the infrastructure is just not there. And so that's why we're going through this hyperinflation. They're trying to kill all oil sort of industry growth, but there's no alternative. So if you kill the oil industry and there's no alternative, what's going to happen to price? Well, price of oil is going to go through the roof. You guys, hey, it's a great analogy. I mean, geez, you see what's going on in fucking Australia right now. Do you all remember? What would the Ayatollah rock and roller do for a gallon of unleaded gasoline? Would he kill you? Would he rape you? Sure. You remember his and what was all you Road Warrior fans. I mean, it looks like we're heading towards this world, so we better know these characters' names. What was the guy with the black mohawk? What was his name? Does anybody remember what his name was? Remember, and he had the play the little blonde, and then remember the guy who had the boomerang, right? He threw it at him, and it like stuck into his little bimbo, the little blonde boy on the back of the Thor. Was that his name? Thor. Anyway, what would they do for a gallon of gasoline? Because obviously, not a hell of a lot of gasoline was made in that movie and in that world. So, how bad does bad get? Could get pretty bad. I did hear somebody, our little conspiracy theory guy, the guy who was watching the Davos videos, and of course, lots of clickbait from that guy. But he was going on about how he actually fully expects that airline tickets, the price of airline tickets, could easily double or triple here. Might even go like 5, 10x. Why? Not because the cost of aircraft is going up, or the cost of a pilot, although pilots are hard to find. But he believes that the Davos people, the Mark Carney guys, the Klauses, they are going to tax the shit out of airline and jet fuel, to the point where they might even put these companies right out of business. So I thought that was an interesting speculation I hadn't thought of before, but my commute between Vancouver and Portugal might get just stunningly expensive. And that'll be done on purpose, which is a pretty sad. Anyway, we'll see how it goes. So we'll cross that bridge when we come to it. But the point here is this is a V bottom. We just actually put in a very well-defined M top. I mean, that's very, very well-defined. It's going to take, at the bare minimum, you all know me, I'm going to say, because this validated trend line is now in place. I mean, that is now the trend. And you can even see, remember, this is a weekly price chart. So you can even see the 13 weekly SMA is actually now just basically going to ride along with this downtrend. We would not get a buy signal here until we actually break that trend line and then go and W out on the other side of that trend line. There is going to be a ton of work that has to be done here to get this thing back on track. And frankly speaking, I don't think it's going to happen. I think we're going to rally up, and then we're going to really crank down. Knee-jerk reaction. We should always be asking ourselves anytime we do technical analysis, what's the, just as we did 38.2s, what's a 50% rule? And of course, longtime site member and also alum of our school, Colin, he is really big on the 38.2 to 50% level as his pump chaser zone. So ironically enough, if you wanted to invest in the stock market, ironically enough, there's your window. Interesting how we have the 4-year, what I like to call the business cycle moving average. So that's coming into play. 50% level. Is that, actually, what's the best way to ask this? Who can tell me? Well, okay, we won't go there. All I'm just simply say is 50% roll. We could also say things like Wyckoff check against that old high, against these lows. I think, if you wanted to buy stock, it looks to me like this is the area to be thinking about it. And then, of course, for anybody who's actually trying to time their purchases, then we go all the way down to things like reload zones. Good old Mountain Man. There is 78.6, Brian's cheap ass level. 88.6 is basically the bottom, and that would be sort of your test of those lows. What's a little scary about this chart is technically we could play connect the dots and go there to there to there. The only question I would have is has this been done, right? Is this actually over? Maybe not. You know, maybe that's still floating out there. I don't know. I guess, I mean, in fact, actually, you know what I would just simply say, and that's probably a really good way to leave this conversation off, is it looks to me like the bull market is done here now. We've rolled over. We are now officially into a bear. Um, moving average systems. This 13 EMA, 30 SMA, actually, it worked really, really well. I remember this because I actually did blog posts and stuff back then of the 2007, 2008 financial crisis. So can you see that's where the moving averages cross there? And you can actually see there's your double top right there. Eh? And then notice, remember I made reference, I said earlier that the 30 SMA, probably price is going to rally back to the moving average, back to the trend line, and then roll over. So if we fast forward to today, there's the double top, there's the trend line, there's the 30 SMA. It's kind of freaky, eh? Jeez, it's almost identical. So this looks a little bothersome, folks. It kind of sucks. What I would just simply say, and you remember, and the interesting thing is this even did have a W and they went and smashed that apart. But I wouldn't be surprised. I mean, I don't know what this is going to look like, but I wouldn't be surprised if we get the counter trend rally into the summer. But as our chart sort of indicated, right, there's your dead cat bounce into that sort of August window. And then the August window through to that November, end of November, I guess, yeah, it's the beginning of November. When's the election? I think it's like the second Tuesday of November or something like that. I think, to be honest with you, they're going to rip the market a new asshole here. And I wouldn't be surprised if it gets so bad, they might even, say things like, well, we're going to, I don't think that they're going to delay the election, but they might. They could very easily. But I think they're going to try as absolutely hard as possible to get the American public to just let the Democrats come back into power and let the banking class continue exactly as the plan is. And my hunch here is they're going to try as hard as possible to prevent the right wing from coming back and taking over the American political machine. Let's see what happens, eh? Oh, God. Talk about your Klaus and your great reset, eh? And frankly speaking, I would not be surprised if they come up with another sickness excuse, more lockdowns, more hyperinflation, more, well, we can't lose our focus on the climate and all that. Oh, yeah, Cheryl's talking about something about monkeypox, so there's a fun backdrop, eh? Jesus H. Christ. Since I've been running this website since I guess 2014, 2015, I have not been this sort of sanguine about things, especially, I mean, I just get clued in today, but especially with the fact, because what's really interesting is there was a gentleman that actually might be interesting. There was a gentleman on I think it's that George Gammon guy. I don't know whether you guys ever watched that George Gammon guy. But he had on one, and I just, I haven't seen the actual video, but what I did was I just saw, of course, the little teaser, and of course you see the teaser, and you're like, okay, I got to watch that later on. But I got, of course, now if I want to find it, I can't find it. Anyway, He had on a gentleman in Michael Burberry, I think his name is Burry or something like that. And he he's basically saying that this is a repeat of basically the '08 event. Like nothing's actually really changed here, which is kind of shocking. A little sad, really. But of course now I can't find it. As it always seems to happen. If I hit the home button, maybe it'll be there. Tesla and Coinbase just signed their death warrants. Hey, there you go. Party on. All right, so lots of doomers and gloomers out there. I don't know. I was kind of hoping I could show you that. Anyway, so do yourself a favor, go look at Mr. Gammon's channel there, and listen to his rant about Mr. Burberry. I think his name is Burberry or something like that. Anyway, point of the matter here is that I actually did blog posts out here, and Michael Berry, there he is. Thank you. hey, nice to see you back. I hope my foul mouth, piss poor attitude didn't scare you away. Good to see. I have a really hard time keeping women on the site because I'm just so gruff. All right, so this is gentleman here, far more attractive, far more politically correct. But anyway, this gentleman here, ironically enough, basically, and this is the kick in the pants. So, ironically enough, all he's doing is just talking about that signal right there. I mean, now that you guys are all TRI aficionados, I mean, the interesting thing about this, people, is that, this is the whole reason why I like using and teaching you this indicator. This indicator flashed a sell signal, weekly S&P 500, right up here. And it did not issue a buy signal until after Barack Obama was elected U.S. president. All of George Bush and all his cronies, they run out of Washington on a rail. And of course, we went into the money printing burr world, quantitative easing, bullshit, con job world society that we live in now. So I don't know. You tell me. Is that a message that you should respect? Do you understand why a guy like Michael Burry or whatever his name is would be bearish? I mean, that's pretty ugly looking signal right there, folks. And the irony of it all is this will not be a buy until we get a W on the other side of this trend line. So if we go back to 2008, you notice there is the top, and your buy signal didn't really actually come in until this W right here. I think that's actually your W. This is all the froth of the market. And of course, there is the United States of America going bankrupt. And then, interestingly enough, the sort of emergency relief aid package. And this is, of course, where Julian gets so upset with me, because my job in his eyes is to tell him exactly this point in advance. That's the only reason why he wants to know me is, Brian, you have to be able to tell me this point exactly. I can't do that. Nobody can. But I would argue that if you follow this trend line model, that you actually let all this shit, because you don't know what's going to happen here, but actually this is your buy signal there, down, up, there, breakout on the other side of the trend line. So, and looking back in hindsight, it was tested down here. This is probably the reload zone of that breakout, but I think that was the right level to get long. So, there's your backdrop. So, in a weird sort of way, guys, and you just tell me, do you understand why Michael Burry? Do you now, can you see the similarities? Do you see why he's gone? Man, this just looks exactly like the fucking last time we did this. Foggy buggies. So, yeah, if we did the foggy buggy off of here, the foggy buggy elephant. Boom. Yeah, 877 up in there. Probably off of there, eh? Well, how high did we go here? Vroom! Actually, that makes sense. 16.88. Actually, interesting. Look how 16.88 lines up almost perfectly with that double top. So now you can do a foggy boggy going the other way. So, and actually, I do like this, Because notice 4.669 basically is a wash of these lows. So actually, I do that. That actually makes a lot of sense. And also notice 2.618 actually is going to be playing with this 4-year moving average, and it's going to be down into these lows and fill that gap in. So probably what happens is we go into the end of July, right? And Cheryl, what do you think? Did I sell you on the validity of this idea that we probably should be thinking the end of July here? And we're like, how about you people over on YouTube? There's 40 people over there. Did I sell you guys on the idea that we probably don't get conned into the idea that this is a bottom here? Really, we should probably think the end of July for this bottom. I hope you guys bought the message. Man, I fucking blabbed on there for about a half an hour trying to sell you it. So, there's your dump into the end of June, beginning of July kind of deal. Let's all wrap ourselves in the American flag. Rah, rah, USA, and then big rally back up. And God, I've seen this happen time and time again now on these foggies. We come back, we're going to play at that moving average, probably back there at that trend line. And it's just going to be a kiss of 100% from the other side. Does this make sense? Any of you guys over there? What are you guys going over there? Cliff Moore. Wow, you're Cliff Moore. Actually, you know what? I should be talking about all the questions and shit, eh? I think I saw Grim in here. I got going, man, and I just didn't stop blabbing until I got all of that out. So sorry about that. Yeah, and unfortunately, I think what happens here is this is going to be on some sort of insane spike in energy prices. I mean, I always make it a rule that Liam's car always has a full tank of gas. So I always. Hey, there he is. You're good. I'm here watching. I thought I saw out of the corner of my eye you joined. So I guess you guys are all right. I should really get to the questions. But anyway, what I think happens here is, don't be surprised. I saw the other day that Vladdy actually, I think I even saw today. Vladdy's actually launching missiles at Kiev. Is there a possibility that he maybe launches a small nuclear warhead at Kiev? Wouldn't surprise me. Welcome to the fucking end of the world, folks. I hope you enjoy the ride. But it wouldn't surprise me. If anything, maybe he launches the nuclear warhead and that freaks out the world. Stock market's cranked. Crude oil goes up to $200 a barrel, whatever. And the world's like, okay, enough is enough. We got to deal with this guy. And everybody all fucking gets together and we go and string him up by the nuts or something. So, point of the matter here is not a pretty looking chart. This is a tough looking chart. Tough. Maybe he gets monkeypox. Who knows? So, in that kind of backdrop, am I going to be really touting a lot of bullish setups here? No. I'm just sort of treading water. If anything, I have been talking to you guys. I mean, if anything, I hope you guys appreciate that my message has been pretty consistent since January, especially since we pulled up this January barometer and we were looking at this going, oh my God, what the hell's going on here? So, if anything, I've been waiting for this end of June event. So at least we're finally here. Heading into the end of the month, maybe even around July 4th or something like that. I believe there should be some sort of capitulation low. And maybe we can start thinking about some trades there heading into the latter part of the summer. But right now, man, I just don't have anything to get excited about. All right, so there's your backdrop. It is the 5th of June. Like we said, over the next sort of 3-4 weeks, we should look for that final sort of capitulation low. No idea what it's going to look like, but that's what I'll be looking for. Looking for the counter trend rally back up into resistance. So we're nowhere near any buy signals. We're nowhere near market being bullish at all. All right. Number one, Crazy Neckline says, hi, Brian. As you know, I'm trying to understand the bot better to restart my vetting activities. Therefore, may I kindly ask you to once again demonstrate the bot setup, especially Following areas of interest to me: how to determine the direction to hunt for, bull or bear. I've been using institutional bias on my higher time frames, but this didn't work out for me. Oh, that's too bad. Should have. Should I focus on RLZs and maybe take the breadth index as an indicator? Not a bad idea. Mention in your tutorial to hunt for significant high lows. Can you elaborate when a high low is to be considered significant? Actually, I seem to remember. I don't know whether you're in the level 2 or level 3 program, but I remember actually somebody was pressing Kiran. And interestingly enough, from a swing perspective, he was just like, yeah, just keep it simple. And frankly speaking, I agree with him. You can change this to a line chart. That makes it easier. And you can sort of see, well, that's where it stopped going down. That's where it started going up. Stop going down, start going up. I would definitely say you want to do things like add M's and W's to help you see the pivot highs and lows ahead of time. It's not bad. The problem here now, and I don't know how long you've been working with us here at TRI, but you can see basically if we use something like the S&P 500 as our proxy in the stock market, I think you could make the argument that we started breaking down here back in January. Here it is June. So the past 6 months, this has just been shitsville. I mean, I can't imagine Bitcoin looks any better. I seem to remember, Crazy Neckline, you said that you were doing a lot of crypto. Yeah, there's just, where are the W's? I mean, there was a cute little one that came in there, popped up, but this is an awful, awful market. And this is the whole point of the weekly commodity trend survey. We go to crypto top 30. Whoops, no, we don't go there. I'll scroll down here, crypto top 30. I think I have it on here. Hey, there we go. And you go Bitcoin. And you say the weekly 13 EMA is 36.68. And the weekly 30 SMA is 43. So just like I showed you with the S&P 500, that bullish or bearish? I mean, clearly that's bearish. The fast moving average is below the slow moving average. What does the visual image look like? It looks like this. Fast moving average is below the slow moving average. So just out of curiosity, really, let's just keep this as simple as possible, people. Should you be hunting bullish setups or bearish setups in this environment? Keep it simple. Don't fight the trend. Ewald says, I got great value from this already. Thanks, Brian. I got to go. All right, I'll take it easy, Ewald. I think that's John, not mistaken. Anyone? How about any of you over on YouTube? I mean, keep this simple, people. Don't fight this. That's the whole point of why I put the weekly commodity trend survey together. And this thing should be pointing down, right? John, and it's so cool the way John's put this. So basically, I'm, and it's kind of funny. It's like I've got John, who's a student of mine, and he's only been around for a year or two. I think that's Ewald there, who just had to leave. He's put this page together, and I'm getting him to teach Sjord, who I've been working with for 5 fucking years. Excuse my French. To teach Sjord how to do this, right? I mean, these are all versus the US dollar. So I don't know where the hell Bitcoin is on this. Hopefully we can get Sjord to the point when we build the weekly commodity trend survey out. But I mean, hopefully you can see what's the color of these trends? Is that bullish or bearish? And hint, red is supposed to trigger you. Oh, that's bad. That's bad. I mean, it's bearish. These I don't like the idea of shorting markets that have been going down for a year. It's kind of coming to the end of the party, right? And you can see all these 5s. There's even a couple 6s that want to turn back up here. And here is he's got a crypto index. So I think this is a project that he and Shark Toshi put together. But just like I showed you with the S&P 500, right? There is that moving average relationship. And you see that it actually crossed bearishly way over here. And it's been going down now for what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23 weeks. And actually 20, 23 weeks, that's actually not a bad trade window. So shorting this M top breakdown here actually isn't a terrible idea as far as I'm concerned. And then, of course, what do you think? Are people feeling relatively bullish or relatively bearish? Not so good. Ideally, of course, right? M tops. I mean, ideally, that's where your short is right there. Or you could have hunted the counter trend rally off of that. Check of the moving average, just like I showed you with the S&P 500. Check of the trend line, check of the moving average, and hunted this bearish fractal in here to get short. Point of the matter here is red is bearish, not bullish. And look at that. Do we have any coins that are bullish? Look at that. Every single one of them is all down, all red. So you can't touch this stuff, right? They're all bearish. There we go. So actually we have finally over here, and just even not even. So these are the ones that actually haven't broken down yet. They're a little dangerous. You can see 2s and 3s. Twos and two, like 1s and 2s. Like here, one, this USDI tether. That's a 1. That's got to be, that's a little dangerous. I don't know what the hell this thing looks like. Oh, this is one of these funny dead. Oh, yeah. I don't know whether you can really interpret this because I mean, maybe this is a comment on tethers. I don't know. But with these funny little wicks and stuff on these DeFi stable names, I don't know whether you can actually believe that price action. Anyway, just the point I would just say is you can see there's a hell of a lot of red. And, the irony of it all is that we'll just slowly put in bottoms. Then the moving averages will start turning back up. And then we'll be back in green in a year or two from now when we're back in the bull and everybody won't remember what this environment like. But just right now, this environment sucks horse cocks. Simple as that. So anyway, so that was the point. What I just wanted to simply mention was, off of the dashboard here, yeah, we don't have the Seward's engine is just up and running, so he hasn't calculated the ages of the trends yet. I guess as they're coming in, he's plotting them. But anyway, so that's building out, something to look forward to. Yeah, I'm not quite sure how the hell we got off on that. Oh yeah, this guy, he wants me to do everything here. So, honestly, crazy neckline, the easiest way you can think about this, don't overthink this. If anything, I think, I saw you down on like 15-minute charts and stuff like that, doing like 3 or 4 trades consecutively. I think probably your best bet is to maybe just focus in on a few names, like a basket of names. And first and foremost, like if you're hunting bullish bots, you want to see the higher time frames are pointing higher. So would I be hunting a bullish setup here on Bitcoin right now? No, I mean, there just isn't. And remember, you showed me that spreadsheet of a whole bunch of losing trades, and a whole bunch of them were trying to pick bottoms there. So there's that. Then I would also say, go down to your daily charts. Same sort of thing. You want to use a moving average system even here, right? If we look at the daily price chart, moving average system, 13 EMA, 30 SMA, since April, no reason to be hunting any longs. Trend is down. So you could do that. I suppose if you had this sort of approach, and then, fudge. Forward. Oof, right. So then we'll just go something like that. And we'll go, oops. So we see that the higher time frame is down. So we're going to drill down to say like a 4-hour chart. At this point, I would say you'd be hunting shorts, right? So I can see there was one here to here and one that set up. Boom. Flip it around. So at least a 33% correction, no more than 66. Then you clone that. And I'm not going to, it would take time to zoom in and get the levels exactly correct. So I'm just going to eyeball it. Go bot trade. Flip it around. Oops, try again. Flip it around. There we go. And there's your short entry. And in this one, you've got one high, two highs, three highs, four highs. You can see how the market is setting this up, eh? All right. So could you sneak in here somewhere through here? Do you have indicators that are rolling over? Beautiful breakdown in RSI. Actually, this is Willie, beg your pardon. Actually, that's interesting. This should be, there we go. All right, so in this particular case, actually probably the reason why I was showing is Willie was stupidly overbought there. RSI breaking down, nice MACD divergence there and momentum, whatever reason, it's up to you. I like this just AEB. Get rid of that. Oops, what am I doing? All right, AEB. BD. Enter. There's stop to scratch. So this is a 4-hour chart. You went short there. Looks like somewhere in the middle of April. Your move stop to scratch level was hit. Has move stop to trailing level been hit yet? So if anybody who's a bot expert can answer that question. Move stop to scratch. Move stop to trailing has not been hit. So if you're short off of this double top breakdown here, 4-hour chart, remember we had the daily trend was pointing down based on moving averages, weekly trend pointing down. So I'm just going to go with those higher time frame trends. I've got my short level that came in, just mapping out the bot levels. How can I find 3 lower highs, market structure? I don't mind that. I think you got lots of reasons to get short there. Move stop to scratch. Target is 12,400. Where should your stop be right now? And right now, should be short from roughly 39,000. We're really simple. That number again, 39, 300, right? I'll just make it really simple. Stop, your initial stop was up there at this high here, whatever that is. 47, 48, whatever that is, right? So 48. Keep it simple. You had move stop to scratch hit. So where should your stop be now? And you should have AOC order. Target is AOCO order. Well, we'll just say AOCO at, well, we'll be generous, 13,000. That's simple. There you go. You now have one crypto trade going back, what, 2.5 months. It's just that simple. All right. So honestly, sir, and my opinion here is you want somebody to talk you through this. Now, I want to see just more miles under your tires. Maybe leave the lower time frame setups alone and do the moving average system. You want to do daily, weekly, and only take trades where both the daily and the weekly are pointing in the same direction, and those are the trades that you take. Fine, it'll slow you down. I think, unfortunately, also too, you're in a very unfriendly market right now. That's its job is to destroy all you new people to trading. So, Merry fucking Christmas. If anything, what I would suggest is if you really do like this trading thing, and I noticed a lot of the day traders, they had setups that were working really nicely. Market state shifted, and all of a sudden it doesn't work anymore. So then you as a trader, you have to have several different setups in your repertoire, and you have to be able to pull on various different ones at various different times, because sometimes the market state changes and the setup just doesn't work. So hopefully that gives you just a simple illustration. I mean, you watch the video in the library. Everything is extremely self-explanatory. I gave you some, I don't know whether it was you, but I did give another person some feedback that they were just over trading and trying to push too hard. And you're trying to take long setups in a down market. That's never a good idea. You mentioned in your tutorial to hunt for significant high lows. Can you elaborate when a high low is to be considered significant? First, I use fractals as indicators, with the opposite fractal being my high low. For now, I rather look for wave-like motions. Any recommendations for a clear rule? Yeah, I mean, you could say something like move has to be at least 38.2 of the previous move, and then start watching. If you start seeing M's or W's developing off 38.2 retracement, then maybe you got a bot setup. If you see a reload zone retracements, well, now that you have a trading range setup. Well, maybe, okay, I'm going to leave crazy neckline for now. We've gone over a lot of this stuff recently, so actually, yeah, a little surprised at you, crazy. Anyway, level 3 student, can you please tell your opinion about gold macro view? Can you share your view on why gold rallied in 1980 and its connection to Fed funds rate cycle? Can you see similar gold rally at the end of this interest rate cycle in 2060? To be perfectly honest with you, I think the reason why gold did not rally is because too many people own gold expecting it to rally. So I believe actually Bitcoin was created specifically to eat gold's lunch. Everybody in the market knew that we were heading into an inflation period here, where the U.S. Monetary authorities were going to be printing money like there's no tomorrow, quantitative easing, all that stuff. And so as a result, Bitcoin was created to try and absorb a lot of that buying interest, which, of course, terribly politically incorrect thing to say. And of course, nobody ever believes me when I say that, but that's honestly what I think. So ironically enough, there is your raw price action. Frankly speaking, it's interesting on the site in the year 2000, I always tell people that in year 2000, I used to go and buy my lunch, 6-inch tuna on cheese from Subway, and it was $2.75. And I fully expected at the end of this cycle that, sadly, you guys all want Bitcoin to be $100,000. Well, that means your loaf of bread is going to be like $50. I thought, believe it or not, that the cycle would actually top out at 3x. So that would mean that 6-inch sandwich goes to roughly $9. And I think, if I'm not mistaken, when I went to Subway recently, The 6-inch sandwich is about $7 or $8 now. So we're just about there. What I would say is, ironically enough, all gold, I mean, gold has really done quite well. Uh, Gold, I remember specifically marketing gold to people at like $250 an ounce. Just none of you guys, it's kind of like talking to, I remember I bought my Bitcoins at $460. Well, it's the same sort of logic. It's just nobody wants to seem to acknowledge the fact that it was $250 about 20 years ago. And so, really, the gold price, even now, it's gone up about 6 or 7 fold, just even from there. And at the peak, it was, a 7-fold increase. So, according to this logic, my Subway sandwich should be what? 6 times 275, about $12 or $13. And I thought it was interesting. Zach over in Hawaii was telling me he went to Subway to buy lunch for his kid the other day, and a foot-long turkey sub with a pop was $17-18 US. So in a weird sort of way, gold price has done everything that you would expect it to do in the fear cycle. The tragedy for this, though, is that all this has done is it's just sort of kept pace, kind of like everybody's all excited about the fact that their house price has gone and doubled, tripled, quadrupled. But if your gas price doubles, quadruples, if the stock market doubles, quadruples, if Bitcoin price doubles, quadruples, if gold price doubles, quadruples, isn't everything actually just all staying the same? And that's what I think is going on. So what's actually driving this? Is it a love affair for gold? No. Ironically enough, I would actually make the argument that there's less demand in the world for gold now than there used to be. Far less. Now, I won't get into the reasons, but, think Indian wedding season. So, ironically enough, on top of the fact that all the millennials and anyway, I think it's the millennials. I don't know who the fuck generation it is. But they were sort of convinced to put all their panic buying and hatred of fiat currency into this thing called Bitcoin, meant that a huge demand that should have been in the gold market just never materialized. And, I might make the argument that the first part of this cycle, this was all about George Bush Jr., their phony baloney war on terror, them blowing up the U.S. housing market, them basically gutting the financial system. That was reflected in the price of gold, and gold did very, very well. And in essence, you could make the argument that the gold market knew that quantitative easing was coming. This was that move. That's a 10-fold move. Boom. Right? $300, $2,000. Just missed 2,000. There's your 2,000 print. It's just a 10x move. That's it. And probably the irony of it all is that this thing probably needs to go up to probably $2,500 to actually complete that 10x move. That wouldn't surprise me. Ironically enough, maybe we get all the kids all rah-rah Bitcoin and, digital currencies and all that. Nobody's interested in gold anymore. And then next cycle, it does do a 1980 where it just goes straight up to the roof because nobody's invested. I used to prospect back here for brokers. And I remember I used to call this one guy and he said, I bought my gold at $700 an ounce buying and I'm not selling. And he never did. And I would make the argument that guy's probably still long his gold from 700 and he's looking for that moonshot. It's probably also the same as, all the stupid, well, I better not say that. All the wise, shrewd investors that come in and bought Bitcoin at 50, 60,000, they're never going to sell their Bitcoin. And, maybe 2 or 3 or 4 halving events down the road, the cost of production of a Bitcoin will be 50, 60,000. And then at that point, the price goes zooming up to a few 100,000 and they feel vindicated. See, Brian, but the irony of it all is that the purchasing power of the money at that point, right? The purchasing power of $1 here was not even remotely similar to the purchasing power of $1 here. So, I wouldn't be surprised, ironically enough, that when all of the dust settles, the gold market just settles right back into a good old reload zone. So that means right now, I think gold probably, interestingly enough, from a value perspective, I actually like the idea of gold trading, and probably $1,000 an ounce is its floor, just like $250 an ounce was its floor through this greed cycle. So $1,000 an ounce is probably going to be the floor going forward. If it really pukes out, and the Fed actually does have some religion about reducing the balance sheet and actually reducing the money supply in the marketplace, which I don't think they do, but if they do, then maybe gold works its way all the way back down to these original lows, but I doubt it. It's not what I would expect to happen. So, interestingly enough, kind of like Bitcoin, same sort of thing. Could we see gold over the next 10, 15 years do nothing more than a Wyckoff check of that old historic breakout high of $800? Sure, why not? We're going to do any old damn thing at once. In fact, I might even argue that if we go into some sort of massive deflationary spiral, I could see that is your top of your market, right? We get some sort of spike there. But then, interestingly enough, we might actually even do something like that, where this becomes like a megaphone, and, on our correction, we actually dip right back down into reload zones, but that's like 5, 10, 15 years down the road. So it's nothing to really be thinking about today. I think probably today, and the whole sort of macro environment right now, is all about Vladdy and Eastern Europe. Does this get contained in Eastern Europe? You might find that if, say, the Republicans win the election in November, you might find that the banksters actually ratchet the temperature up. And maybe they prod Vladdy into expanding the war and going just full bore against the West. Wouldn't surprise me. And interesting enough, too, if we actually do have a nuclear war, would that be inflationary or deflationary? I actually think that would be extremely deflationary, because what is inflation? Theoretically, inflation is nothing more than the velocity of the purchasing power of money, or let's just say the velocity of money. How many transactions are actually being done? And obviously, in the event of a nuclear war, people are probably not going to go out to restaurants. They're not going to be taking cabs. They're not going to be going to entertainment, because everything's going to be vaporized. The economy is probably going to shrink quite a bit. And it'll be that day that somebody says, oh, by the way, did you know the emperor doesn't have any clothes on? And of course, we'll have to deal with that at that time too. Party. So I don't know whether that helps answer your question or not. What I will say is, if you just think about this from like a sine wave perspective, I can't really comment on the interest rate policy so much as what I'm just going to simply say is, if we go, darn, how are we going to do this? Let's go the other way around. Go there, to there. You can see this is sort of the whole sort of fear, greed cycle thesis. So there is, basically that's 2020 peak. Is the peak here? Is the peak here? Do we maybe even peak here? I don't know. But what I would say is if you can just think about this on a longer term perspective, being bullish of gold, like that was your gold cycle. If anything, now I think you actually have to be thinking, what does this top look like? And what does the ultimate bottom look like in the next 10, 15 years? That's what I'm thinking right now. How does this correspond with the interest rate cycle? Oh boy, that's probably just too big of a can of worms to try and unwrap in a conversation like this. I'll think about it going forward. Anyway, hopefully that gives you a little bit of food for thought. We can always talk more about this. Same level things. What's your opinion on dynamic yield curve not being inverted in its current relation to SPX cycle, recent price action? And that's the whole $64,000 question is, does the yield curve invert, which implies recession, i.e., we're not getting any growth on the long end? The interesting thing about it is if these bonds are going to start cranking down in earnest, then that ironically will mean that we won't have a yield curve inversion. And I hate to say it, I've said it repeatedly, but I don't think anybody's listening to me. And actually, why don't we'll do a survey. Let's see whether any of you actually are listening to me. Is the United States the focal point of the shit here this current cycle? Is the United States the market that we should be worried about crashes and recessions happening? Thank you, Edward. Thank you, Waleed. Any of you people over there on YouTube, do you understand this? Remember, the United States, it had its shit hit the fan moment in 2008. This cycle, I don't think has anything to do with the United States of America. As good old Powell has said repeatedly, the United States of America's balance sheet actually looks pretty good. Yeah, it's going to be an economic downturn. Yeah, the media, of course, they're these goddamn media people are so owned and programmed. They're just going to be constantly spitting out environment, ESG, and all that bullshit, because clearly that's what Klaus and the 1% want us to be thinking here. But I would make the argument that it's the international markets that are most vulnerable. And the worst part about it is that we can go about this two ways. You can either deflate, which is all of the bonds go into receivership and into bankruptcy, the bankers lose. Or they can inflate the economy. The public literally goes through a Great Depression. $50 for a pack of fucking cigarettes in Australia right now. What the fucking fuck? And the bankers win. Now, what world are we living in, folks? We're going to go through the bad economic times here. But because the banks own all the bonds, and the banks are the ones that issued the bonds, and they're the ones driving the bus, they're not going to let this shit deflate. They're not going to let this go into receivership and bankruptcy, and the people that are bankrupt actually should be bankrupted. They're just not going to let that happen. Now, my curiosity here is, have we gotten to the point where these people actually think that they're bigger than the market? Maybe this is the opportunity where the market says, no, actually, I'm sorry, United States of America and all you banker cartel, you're not bigger than the market. The market's bigger than you. But that's all going to be predicated, like I said, on whether we have, this government in the United States of America that just wants to keep spending money like a drunken fucking whore or sailor or whatever the reference is. As that George Benner, what's his name? George guy says, your drunken, insolvent uncle. So, all right. So, Let's see if we can just, what time is it? 12:45, 15 minutes, and then I got to get the hell out of here. So we didn't actually look at the yield curve. I talked to you a little bit about what I'm thinking their yield curve. So what that means is I would actually expect the long bonds to actually get worse here. I would expect their yields to rise. As you can see, we don't have a situation where the U.S. stock market's going to head into recession here. I don't actually believe that that's going to happen. I definitely think that we're going through a healthy technical correction. I don't know what they're going to do to try and manipulate this fall election in the United States, but I actually think the problems are overseas. They're not, this is not a United States problem. This is an Australia problem. This is a Canada problem. What are Canada and George Gammon, thank you. What are Canada and Australia known for in the world? Other than being absolute stupid fucking idiots and not knowing how to manage balance sheets, and now have set their citizens up to basically become bankrupted by their democratically elected government. Thank you, fucking Justin Castro, working for Klaus von Dickhead. And when you ask in the Canadian government, what's the relationship between the current Canadian government and Klaus von Dickhead? And literally they say, "Oh, that's a question you're not allowed to ask." And then next question. Like, fuck me, is this the world that we're in? It's really that bad? Yeah, okay, I got to get going here. Sorry. I keep blabbing away. So there is no yield curve inversion. If and when the yield curve does invert, then let's talk about it, okay? But right now, I don't see any inversion. And like I said, I actually think the bonds are going to get hit again here, which means that these yields are going to get driven up higher, which is going to screw the international economy even more. Okay, number 4, given what a large producer of commodities Russia is and the echoing effect of fertilizer potash reduction in the world's food supply, revealing a possible world economic downturn, could we still see the end of the fear cycle ahead? Well, we've already transitioned out of the fear cycle. We are now officially into your generation, the millennial generation's greed cycle. Doesn't necessarily mean that it starts off friendly. Then we might find, I mean, the sad part about it is I hope you all can see that this was the fear cycle where we're all going to ramp prices up for commodities. I mean, the sad part about it is you look at the crude oil as a commodity, and I mean, this is the scary part, is let's look at the real price of these commodities. Not this phony baloney bullshit that these stupid central bankers and government assholes are trying to ram down our throat, but what is the real price of commodities? I mean, everybody's all excited about wheat prices, but you tell me, there is the wheat chart. Is that a bull market? This is what kills me about this conversation about commodities, and people getting all excited about, oh my God, the price of grain coming out of Ukraine is going to affect the world economy. Yeah, right, whatever. I can absolutely guarantee you there will be a farmer in Australia. There will be a farmer in Brazil. There will be a farmer in Western Canada that will be more than happy to sell you all of the grain you ever want. These people, they overproduce grain like crazy. That's why the price of grains are so low. And the funny thing is year after year after year, they're always talking about record yields. All the GMOs and all that kind of stuff. So how ironic, right? I mean, this is, if anything, what you see on your screen right here, this is the perfect illustration of how the media has programmed the public. The media, of course, owned by corporations. Do you see? I mean, in real terms, are wheat prices going through the roof here right now? This is the tragedy of all of this, folks. It kills you. And what happens if we actually did get into a world where wheat supplies are in jeopardy? What the fuck are prices going to do then? This is, so the hardest part about this for me is that I was sort of schooled in that classic economics. You were not supposed to fuck with your country's money supply. You're just not supposed to do it because things like Zimbabwe happen, things like Weimar Germany happen, things like Venezuela happen. And that's what these fuckers have gone and done here. So, should we not expect it's going to be a wheelbarrow of fucking money to buy a loaf of bread? Should we not expect that? It seems to me we should. Brutal. And no, you're not really in a runaway bull market. You're in a market that's been completely gutted by your 1% that are completely fucked us all over in the public. So sad. I mean, I don't know how to explain this any better to you guys. It's the same message week after week after week. So, I mean, are fertilizer prices high right now? I don't actually think so. Now, do the generational cycles stop? I mean, the whole point where I was going with this to begin with is theoretically through that last fear cycle, that was supposed to be the commodity bull. Well, hopefully you guys can see what they did here. Do you see how George Bush, oops, darn, hold on. You see how George Bush, and trust me, this is like literally, these guys have pulled off the crime of the millennia. And nobody other than some fucking idiot loudmouth Canadian doofus is barking about this. It's remarkable. What do I want to show you here? This is Brent crude. So same sort of conversation. But remember, that last fear cycle, it started in 2000 and it was supposed to be all about commodities. But do you see that pretty much half of this cycle was actually a commodity bear market? You see that? You see how it's almost exactly half? So what ended up happening is, yes, on balance, from the start of the cycle to the end of the cycle, yes, oil prices did rise, but you can clearly see, was there any particular faction of our society that happened to be in power and that might have taken advantage of the fact that they knew that commodity prices were going to be in a bull market here? And they did it while they were in power. And as soon as the day they left power, they literally pulled the plug on the whole fucking thing. Do you see this? So, yeah, this was a commodity cycle. Yeah, commodity prices did go up. And wow, if you were positioned correctly and you knew how to take advantage of this, you did very, very well. Ironically enough, the buy and holders actually, it's just a zero-sum game. How ironic, eh? It went up and then they brought it right back down. So I guess the point I'm trying to make is that, yes, we are now technically in the greed cycle, but does that necessarily mean that, okay, from now on, if I'm a stock investor, that's this kind of market. So you can see through the fear cycle, there's 2000, crude oil prices went absolutely through the roof. Equity prices actually collapsed. That's basically what's supposed to happen. Could this thing take, instead of just, fear cycle, so that means, greed cycles, so that means we got 17 years of unending prosperity ahead of us. Is it going to look like this? Maybe not. Maybe, because keep in mind, I always tell you guys that the current growth cycle actually started right here. So could you actually find that maybe all the money printing, all the hyperinflation, all the war. Maybe this motherfucker just does this. And then, right as we're coming into the end of the cycle, we go through this massive economic expansion. Down the road, 10 years from now, all of the people that fucked us over here, they've all been run out of political circles. All of you millennials now are like, fuck it. We want, conservative, pro business, get these goddamn socialists under control. But it takes 10 years to clean this up. And you don't see the big push in these kind of assets for like 5-10 years from now. I could totally see that. Wouldn't surprise me one fucking bit. And you, as professionals in this business, have to understand this. It doesn't move in a straight line. The most important thing you need to understand about these generational cycles, Jupiter, Saturn cross, is you have to be able to see the forest through the trees. Don't be too wrapped up in the trees. The trees are pretty, they're beautiful. You have to see the forest, the whole market in its entirety, and what is the general direction that we're heading in. All right, sure hope that helped. Blah, 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 blah. And by all means, you can always do a follow-up here. Brian, nope, didn't help. Can you ask a question again? And I'll try and do it again. Okay. Yep. The irony of it all is that I think Russia as a commodity country, it's just like Australia, it's just like Canada. They're broke. These commodity countries are bankrupt. So when you're bankrupt and you're pressed against the wall and you have no alternative, what do? I know. Well, let's go start a war and start murdering our fellow human beings. The Americans did it in 2000, 2001. 9/11. Yeah, that's awfully convenient. Got the commodity market going, got the internal military machine going in the United States. Of course, borrowed it. What is it like? Can't even remember what the final bill is, but they got the economy going and everything was fine because hey, we found a way to justify going and stealing other people's assets and of course murdering other humans. And let's call a spade, people. That's what these fuckers do. And frankly speaking, I'm disgusted at this species. I used to tell people when I was at the prop firm, and when I was trying to look after Joanne, and fucking Joanne blew herself up. I honestly don't think I'm a human being. I really don't, because I'm just absolutely disgusted at how this fucking species acts. And, the reason why Vladdy's doing what he's doing is because he's a cornered son of a bitch who's in power, and he's got to somehow change the narrative that it turns out that the Russian vaccine is garbage. And of course, anybody could have told you that was garbage, as a waste of time. That their economy is basically broke, and that it's the end of the commodity cycle. And if oil goes off the board, Russia's fucked. So, hey, everything, all other alternatives are exhausted. Let's pick up the guns and start murdering people. Terrible species. Terrible fucking species. Anyway, moving on. So I might argue that half of what Russia's doing is because they know that they're bankrupt and they know that they have a bad cycle ahead of them. And the sad part about it is it's going to become a self-fulfilling prophecy. How many people do you think right now, with Australia charging $20 for a pack of smokes, and I see somebody up there said that they're charging in Australia something like $20 for a head of lettuce now? Is that right? I don't know. $20 for a bunch of lettuce as well. What do you think the odds are anybody's going to want to move there? You want to move to Australia now? Is that a good place to relocate? How about Justin Castro and the way that he's acting here and the way that he's treated the truckers? And I don't know whether you saw the government of Quebec. Basically, it's martial law in this country. Anybody going to want to move to Canada? How about when I show you the absolute stupidity of real estate prices here in the Lower Mainland? Is there really going to be a lot of people that are fucking? And you know what kills you is that these the little Barbie girl is fucking in charge of my finance department here, has no experience in the industry whatsoever. She says, "Well, the reason why Canadian house prices are so high is because it's such a popular country. Everybody wants to move here." And then they found a study. They actually did a study recently that said that like 2/3 of all the immigrants that have moved here to Canada are defaulting on their debts, and that are actually in government sponsored welfare programs now. 2/3. So are these people supposed to be affording $2-3 million houses in downtown Vancouver? Like, what the fuck is going on? Obviously, it's the biggest fucking con job possible. I told you, this was the crime of the millennium. I would be willing to bet hundreds of years from now, people are going to talk about this crime as literally stealing an entire generations of wealth and transferring it to the 1%. It's literally the crime of the millennium. Anyway. Okay, moving on. Number 5. Punishments. Ryan, level 1. Brian, with all the unfortunate events surrounding the recent school shootings in Texas, isn't it terrible? God. The U.S. government have its eyes set on further firearms regulation, especially when it comes to assault rifles and high-powered ammunition. Is it possible that they were to try and pass a bill to outlaw such weapons? Yeah, it wouldn't surprise me. We would see a massive spike in certain stocks that deal in these types of weapons prior to it being written into law. I hope not, because what your attitude is, there's going to be a massive rush to buy these things. The problem with these kind of stocks, though, is that would be predicated on future demand. And if you're going to go and outlaw these things, I think there would be a massive rush on the actual assault rifles themselves. And I think the rifles themselves will go up in price dramatically. And the ammunition and all the ancillaries, everything around them, because they will become a very precious commodity. The actual stocks themselves, no. In fact, I would actually expect them to go opposite, as soon as a government sort of passes a law or something, then what ends up happening is it opens up actually the road for legislation or legal action. So you might actually find that these companies actually start getting sued absolutely through the nose here. So I don't like. I mean, I would actually say the commodity itself will actually be bid up, and if you want to become a gun runner, that's probably going to become a popular business. My hunch is gun runners actually will probably do very, very well in that scenario. And that's the saddest part about this is, there's so many guns out there that if you really want a gun and you really are motivated, you'll figure out a way to get it. It will probably be on the black market, but my hunch is you'll be able to get it anyway. And the worst part about it is you might find that there becomes actually a huge supply glut of these guns initially as people are surrendering them and trying to sell them at like pawn shops and stuff. So, but I think over the longer term, you probably see that they become commodities unto themselves. So anyway, I don't know whether, I mean, you've heard me going on and on and on about how I'm not very happy with this human species. I don't really like the idea of encouraging people to go out and get guns and resort to violence. So I don't think I could really support this kind of approach. Having said that, I mean, you know how it works, right? Weekly W's on the price charts. Yeah, maybe go and find a weekly W with a 50% level that's quite a bit higher. Give me a call and we'll go buy some call options. All right, Afghan crypto level 1. All hail, whatever. In level 1, week 2, crypto is indicated as being a commodity. However, if you remember a few weeks ago during one of your crypto shows, you were looking at a site and it had BTC crypto listed under currencies. Well, yeah, but we were looking at a commodities site. So we went to, and I saw you ask this question of Grim earlier today. Uh, that was in particular, this is one of my favorite commodity sites. One of my favorite commodity sites for quotes and research. But these guys, they're futures. Everything here is futures. So everything here is a commodity. Interest rate futures quotes, that's commodity. These interest rate products have been commoditized. These stock index baskets, technically they're a commodity now. So currencies, yes. I think Bitcoin was in this category, but this is under the umbrella of the commodities trading market. So how do you actually put a value on something like an Australian dollar? I mean, technically, under this fiat system, they're only worth the full faith of the fill in the blank government. The Australian government doesn't. You don't know. I don't have that much faith in the Australian government. And keep in mind, they're a huge, huge coal producer, and the world, of course, is Greta and fucking listening to fucking Jim Carney, and I think that's his name, John Carney. Anyway, and all the Davos yahoos and shit. I mean, they're hell bent on putting coal out of business. So I can understand why Australia is like, oh shit, we got trouble ahead. Is it a commodity? I mean, technically, it has unlimited supply, but at the same time, too, we call them fiat currencies, but they trade under the commodities umbrella. And I would actually, call all of these things commodities in this respect. And they all trade, especially if we're doing futures contracts. There's very specific sort of legal framework of what a future is. It drives you nuts, of course, in crypto. They don't seem to give a shit about what actual real definitions are. So they call everything futures. But to answer your question, very specifically, there's like 3 or 4 different asset categories. And I need for you to think about it in very simple terms. What is an equity investment? An equity investment implies that you participate in the ownership structure of the entity that you are investing in. You are, in essence, a stakeholder in the entity. You have a say in how the entity actually operates. What do they do? Where do they spend money? Ideally, of course, in an equity investment, you want to see a positive rate of return. I invest $1 in a raw commodity. We repurpose it, sell it into the marketplace for $1.50, and I have a 50-cent profit margin, which gets transferred back to the equity holders. Is Bitcoin an equity? No. No matter how many Bitcoins you own, you will never have how do you describe this? You will never have an earning stream derived off of the amount of Bitcoins that you own. Now, in these crazy POS world, of course, they're trying to create income streams off of these things through the issuance of more coins. I personally think this is a Ponzi and it's a total scam. But, I've watched this cycle now a couple times. You guys almost bought the scam there with Luna. And then unfortunately somebody said, pop, this shit's bullshit. And down she goes. Actually, it was kind of interesting because I saw on my quote screen, and I don't quite understand this, but is Luna back trading again? I go on my little quote screen. Of course, Trex kick it off there. But I was quite surprised to see Luna same symbol. There it is, $5.13 trading away. I'm not quite sure what's going on here, but anyway, it's alive. It's still there. Anyway, we'll see how that goes. Will Trex relist the Luna? It'd be interesting to see what they're going to do with the coins that I still have there. Very good lesson in all venture capital. I mean, I hate to say it. Anybody, of course, got destroyed through this. My heart goes out for you. But really, really good example. You buy something, sell half on a double, and then I don't give a shit about what happens after that. After that, if it goes off the board, so be it. I don't care. It's no big deal to me. But I got to get that double. Right? And that's why you sell half on a double. Exactly this reason. Of course, nobody ever listens to me. Anyway, back to our questions here. What time is it? I really got to get out of here. So I do have to go get pretty. So to answer your question, Bitcoin definitely is not an equity. Is Bitcoin a loan, i.e. fixed income? If I buy a Bitcoin, am I going to get paid a guaranteed monthly income stream in the form of a coupon? Because I bought that, and will I get my principal given back to me at some maturity date down the road? Absolutely not. So Bitcoin is not a fixed income product. We're running out of options here, folks. All right. Is Bitcoin a fiat currency? Well, we definitely know there's no government that fill in the blank. Full faith of whatever the hell government it is backing. And of course, that doesn't mean anything in a fucking fiat currency world, as Australia and Canada are illustrating right now. I mean, fucking Justin Castro, he couldn't give a shit about bondholders here in Canada. And so as a result, the bond market's like, we're not going to lend you any money, you stupid fucking asshole. And the interest rates have gone through the roof here in Canada. And they're probably going to continue that way. The irony of it all is that I think Canadian interest rates could double even from here with this stupid, irresponsible money printing that these idiot socialists have put through here just because they believe in this fucking Klaus von Dickhead guy. And that's the excuse to actually go and completely destroy your country. Thank you very much. What a doofus. And this is from a guy who's never fucking had a real job in his life. I think the toughest job he had was substitute drama teacher. I mean, it's you literally couldn't. They always say you can't write better fiction than reality. And to actually paint a picture of the demise of Western civilization, especially in the face of how wonderfully Canada, the story has been over the past like 40 years. It's just been Canada's so awesome. Canada's so awesome. Canada's so awesome. All right. Well, now that the commodity cycle has shifted, now we have to go on. I heard a guy the other day say that there was a world sort of economic. I can't remember what it was. It was the guy who does the fiery interviews. What the hell is his name? Anyway, a Canadian guy, fiery interviews on YouTube and stuff, gets himself in trouble. And he quoted one world growth agency that said that Canada is now expected, not forecasted, but expected to underperform for the next 30 years. 30 years! Because of the damage this guy has gone and done to the Canadian balance sheet. It's going to take literally a generation to try and fix this damage the guy's done. My hunch is the damage has been so bad, Canada might not even exist by the end of this coming commodity cycle, folks. The country, there was, I remember 20, 30 years ago, we were kicking around the idea of trading this thing called the Amero. So if you know what the Amero is, you know what I mean by the fact that basically Justin has bankrupted this country and we might just hyperinflate our way simply just out of existence. And the Americans come along and just do a mercy killing and just shoot us between the eyes just to put us out of our misery. Thanks, Justin. Jerk. All right, let's see. Any other questions I can ask here? I don't know. Afghan crypto, did that answer your question? We know it's not a bond. Is this you, Sean? No, it didn't answer this question. Is that you? Afghan crypto? I got it. Thanks. Anyway, the point here is that there is a cost to produce these cryptocurrencies, especially POWs. And so as a result, that falls under, oh, okay. That it falls under the commodity classification. It meets all the criteria for a commodity. So I don't understand why people would even debate it being a commodity. I think it is a commodity. The question ultimately here is, how does this POS story play out? And what really bothers me is the banksters, knowing that Bitcoin is a serious threat, they're actually going to use the environmentalists as their way to attack Bitcoin. And they've already even started to do it in New York State. The state itself, under, of course, New York woke central. They get, and also too heavily under like Joey Diamond's media controlled message. They've been spoon fed the message that POW is environmentally unpolitically correct. And so they've basically gone to war with Bitcoin and POW idea. I think personally that is the banksters and the people that want to put Bitcoin out of business. That is their attempt, and they're using the political backdrop of the day, this whole environmental movement, which, by the way, I think is a load of horse shit. Go look at Younger Dryas to try and understand what I mean by that, as sort of the justification for the war that they have. And legislation's already starting to be passed. The interesting thing here, though, and this is the one good part about Bitcoin, is that Bitcoin doesn't care. Bitcoin will head off to El Salvador or wherever it has to go to remain in existence. And if anything, you almost kind of want to see Vladdy do better so that things like Bitcoin actually have a chance in this world. Because if Vladdy goes down and it becomes this one world order, then you might actually find that they could actually ultimately kill Bitcoin. And it would make sense because, like we said earlier, all this generation was supposed to buy Bitcoin so they wouldn't buy gold. Now that job is done. Bitcoin doesn't really have a purpose now. So if they spend the next 10, 20 years just trying to destroy Bitcoin, and really all it'll do is just sit down below the cost of production. Every time we get close to a 51% attack, you see the price work its way up a little bit. It could sit down in the 10 to 30,000 range for the next 10 years, and the public will lose all interest in Bitcoin. Then we get ready for the next cycle, and then we'll see whether Bitcoin can serve a purpose then. But I would actually say, it's going to be tough to make a buck on Bitcoin here, capital gains wise. I think all the juice has already been built into the price. But we'll see. Next cycle, we'll let it bottom. Then we'll, weekly W's, same story. Nothing ever changes. We'll look for those bullish momentum divergences. We'll play the long side. Then we'll go through the halvening event. We'll see what the blow off top looks like. If they can take out the old highs, then great. Rah, rah, hundreds of thousands of dollars. But what it also means is if we do that, then it probably means your loaf of bread's probably $100, $200 a loaf. So anyway. Okay, last question here, then I have to get off to Liam. Why do we prefer gold over copper? Since copper seems to be less affected by the store of value aspect of gold, and copper is used extensively across a large segment of the economic activity. Is the store of value aspect of gold an advantage? I think gold and copper have slightly different physical properties. It's actually interesting. I was listening to Bob Lazard the other day talking about hydrogen technology and how he required you needed to actually use platinum, I think it was, in his electrolysis process because it was much, much less corrosive. So I believe that gold and platinum and palladium, they have they're less corrosive than something like a copper, which is sort of a lesser quality metal, and it can break down a little easier and faster. Having said that, I think you're right. There is more copper out in the world, um, and I think it's more of like a common metal. I mean, there are tons and tons of deposits out there that are just staggeringly huge. It's just a question of, is the price of copper itself high enough to justify those projects going into production? Um, Also, too, kind of like our reference to the Indian wedding season, gold in itself, it has a lot of sort of, I want it kind of thing versus copper, which isn't nearly as sexy of a product as gold. Um, you know, uh, try giving a girl a copper ring on her wedding day and see how that goes over. um, Also, too, you have to carry around a shitload of copper to try and justify like a serious amount of money. Whereas, you don't have the way it worked was, large transactions in the past were gold, but most of the monetary system was actually silver. And they used to trade teals of silver. So if there was going to be a currency system, and really you might argue that, copper is like 1/10 the price of silver, and silver is 1/10 the price of gold, and that, or, something along those lines. Of course, those relationships have been heavily skewed of late. So I would say it's probably the stair stepping is copper's the base, and it's just kind of, you think mentally it's the same image, right? Copper's like your pennies, silver's like your nickels and your dimes and your quarters, and gold would be like your full dollar piece. And so I could say like smaller denominations, smaller transactions could be done in silver or copper. But a large transaction, man, you'd have to trade a lot of copper. Like if you wanted to do $1 million transaction, how many ounces of gold is that? That's $1 million at roughly $2,000 an ounce. That sounds like it's about what 500 ounces of gold, I think, somewhere in that area. At $1.50, $2 a pound, how many pounds of copper do you have to deliver for that $1 million? That's 1 million pounds of copper. Half a million pounds. That's a lot of fucking copper. So I think to a certain degree, it's just really a functionality. You just can't carry around that much copper. All right, last question here. David, level 0. Brian, do you consider yourself as a boomer? No, absolutely not. I am a Gen Xer. So I'm not a child of the baby boomers. I've spent my whole life growing up living in their shadow. My parents were children through the Great Depression. And they grew up and they hit their peak earnings. Well, they grew up and they started to have kids. The people that were born and sort of grew up in the Great Depression, they started to have their kids in the 1960s. So it wasn't as big of a population glut. And I was born in 1970, so right at the very end of sort of Gen Xers. Um, well, no, I would say right in the middle of Gen X. I would personally say that Gen X is from like 1965 maybe to 1985, somewhere in there, 1965 to 1985. Anyone born in that window, I think, is a Gen Xer. And then the millennials, I think everybody born sort of following sort of late 1980s, early 1990s, right through the millennial, I think are the millennium generation. And now, from what I understand, and sort of people kind of has been schooling me this, Gen Xers kids are the kids that were born following the millennium. And so that's Liam. And Liam, my son, is 21 years old. And I think they call them Zoomers. It's kind of a weird name for his generation. I always thought Liam was part of the millennial generation. But from what I understand, the people on the site have been schooling me lately that actually know the millennial generation is the people that were born sort of like maybe 85 through 2000. I don't know. That's a tough one. I still think Liam's millennial generation, but anyway, to answer your question specifically, I consider myself a Gen Xer, and I hate the baby boomers because they basically screwed us. Mr. Fink here saying economy may be muddling on for the next year or two. I'd have to agree with that. You look at the backdrop, and let's just finish this broadcast off with just one very, very simple idea. Who was it that lived 200 years ago that told us that we should expect 2022 and 2023 to be shit? And if he knew, no, I didn't live 200 years ago. And if he lived 200 years ago and could tell us with this amount of accuracy, and he basically said the market was going to peak in 2019. And literally the market peaked December 31st, 2019. I mean, you can't get a better fucking call than that. Anybody on YouTube? Looks like our Hangout people got it, so that's good. But anybody on YouTube? And if you don't know, maybe I'll leave this sort of thought. If you don't know the answer, go and check out our blog. Because if it's one thing I absolutely love, it's our website. This website is the shit, man. I mean, whether it be the tools that we're building to give us a very clear idea of what we should be investing in and what we shouldn't, when we should be participating. I can't tell you how absolutely perfectly spot on this signal on the bonds was, and how worried sick I am about equity now with the way the country funds and the indexes are acting here. Also, too, interesting, all the currencies are all getting bid up against the US dollar. I wonder if the US dollar is about to go on another tear here. Perfect. The breadth indicator told us basically look for that rally in the equity market. Wasn't much, but it was there. Now we're starting to roll over. I mean, these tools are just perfect. Hell, I haven't even talked to you guys about actual trading signals. Because frankly speaking, I don't really want to touch anything. But, first thing tomorrow morning, I can tell you absolutely, I'm going to be checking out what's going on here on the screeners and what are some of the weekly signals that we're getting here. It's just, it's so perfect. I think I've told you before, the library itself, I've had people actually tell me that the library itself is worth the price of subscription. And now we're just adding in another cool key component into the dashboard, our weekly commodity trend survey. And, guys, it doesn't get any easier than this. I mean, really, if anything, what I want to do is I want to get a few bucks from the boys, just put together a little account, and we're just going to simply, if it gives us a 6, get in there and hunt signals. If you don't see a signal or a 6, then don't touch it. It's as simple as that. It's so perfect. It's so simple. It's so pure. I mean, this site is just awesome. Oh, and then to add insult to injury, we've got this school that actually seems to do pretty good at teaching you how to trade and run a small business of trading. So, I mean, the sky's the limit, man. The sky is the absolute limit. Okay, I think I'm going to leave the rant at that for today. I have to go off and get pretty for the boy. So have yourselves an awesome rest of your day. PMA for the win. Try and hit that like button, subscribe, ring Colleen's bell. Geez, I see about 200 or 300 people have already watched the video here today, so that's cool. I hope I answered everybody's question. If you did ask a question in there and you were kind of like, Brian, I still need more clarification. Whoever that was, crazy neckline, I think it was. You know, the good part about it here is, if you, I don't know whether what class level you're in, but your job here, at the very least with like guys like Graham, is your job here is just to sit and take these setups, take them, take them, take them, take them. And the irony of it all is that I want you to get to the point where you're like, oh my God, I've traded this bot so many times. I know that if the indicators look like that, then I don't want to do this. And if the indicators look like this, I don't want to do that. And I know that me personally, when I see the candle act like this, I get freaked out. And then, so that means I got to, and you build out and literally the setup becomes yours. So that's where I need to see you head. But having said that, we can just keep working and keep answering questions. I could probably leave it maybe to like 1 or 2 questions a week. You kind of blitz me with a whole bunch here, but we'll leave it at that for today. But put in comment in next week. Sorry, Brian, you didn't get to this question. Do you mind if I ask it again? Right, and we'll just keep banging away until you guys get this. Okay, I think I'll leave it at that. Chris, if you could take us on out of here, I appreciate it. PMA for the win. All the best. And the only thing left for Brian to say is bye for now.